Hey everybody, welcome back to Markets and Sectors. Nice to have you here today. My name is Mike Fairborn. Looking forward to discussions on the market. What are we seeing big picture? What does the posture of the market look like? We'd like to review that each and every week as we dive on into these details, seeing what's happening within the markets, what areas might be showing strength and weakness. What's the market collectively doing? So we want to look at that. We also want to look at the potential for maybe some big picture trades as well in terms of what we could put on in terms of sample trades within our class that might fit particular macro themes. And so I'll look forward to going into that with you with a number of different indicators as well. So as we get ready to dive into this, just wanted to say that I'm joined in the chat by a good friend and colleague of mine, Cameron May. I can see everybody here. Great to have you folks. Let's dive on into it so we can jump into our core content here real quick. Now, the information here is provided for general information purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application, well, that is used for educational purposes only as well. Now, investing does involve risk, including for some products more than your initial investment. I did put a little segment of futures and futures options trading in here, some disclosures, because we do look at those in this class. It does provide us volume that we get to see on those futures. We don't trade futures here. It's just solely to look at the charts. Finally here, past performance is no guarantee of future results. And at the very bottom here, the Stacks Index was released just yesterday. I want to take a look at that. It's interesting. It's an interesting observation perspective of a number of retail traders. But that historical data should not be used alone when making investment decisions. In fact, the Stacks is not a tradable index. The Stacks should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. All right. So having said all that, and that was a lot, I wanted to go ahead and just take a look at the markets, folks. And what do we want to do just initially here as we get going? Well, we like to take a look at general market posture. Now, you'll see over here that market posture. What do we look at here? Well, first of all, we want to start off with the longer term time frame. This is going to be an easy one probably for the next little bit, but I am going to show you what to look for in terms of potential changes. Now, remember with this, what we want to see is that long term, we're looking at a 10, we're looking at a 40, exponential moving averages, and these are on a 3-year weekly chart. So we want to start off with a weekly first. I've had a number of discussions on this previously. When that MACD becomes wider and it starts to expand, folks, this is a sign of, and remember, we're looking at a longer to more intermediate term time frame. There's no other way to state this. That MACD is a signal amplifier, and this, my friends, is noted to be bullish. In fact, you'll see when the expansion of the MACD lines begin to occur, like you're getting over here, you notice that expansion keeps widening and widening and widening here. That might be one way to show it. These are indications of strength, and sometimes you can really capture these long moves within the market. I mean, that is over a year. That is a run that went over a year, and very, very strong bullish indications on that weekly chart of a potential expansion there, as you can see, okay? Let's go ahead and do this. I want to scoot on over now because we do have an additional time frame to look at here, as well as market posture, but intermediate long-term, bullish. And by the way, it's getting a little busy here on the chart because it does carry over some of these price patterns or just indications. You can see over here we have a couple of ascending triangles, but keep in mind you'll see that also on the daily chart as we scoot on over here and pull up that. Now, what's interesting today is we went right up to that upper channel and tested that, but let's keep focus on the 20 and the 40 exponential moving averages again on our daily chart now. So from weekly, each bar now represents daily. We're only looking at a 1-year time frame here, but you'll see we're getting much of the same thing. We're getting just a general range in between these two. And let me just zoom in, do us all a little bit a favor on our eyes here so we can see that a little bit better. But you can see right through here, we're holding ground. One of the first indications, and by the way, so what are we seeing on a daily chart? So daily, that's also going to be, folks, bullish. Okay. That's going to be bullish. The daily chart is clearly bullish here. One of the signs that we want to look for, though, is the possibility of the shorter exponential moving average. That would be the 10, starting to just sort of curve on down. Because if that starts to curve down, we can get to the point where there is a crossover, and that's what we're looking for in terms of the possibility of weakness. Case in point, let's look at it right over here. Go back in time, just zoom in and see it. We won't need to do this every week, but because we're going to continue with this theme each and every week, we want to keep tabs on it. You'll notice over here, you did get a pretty sharp, and I'll zoom in, but near market highs, what we'll oftentimes see is that uh, exponential, especially on the 10-day, really begin to show some signs. And look at that. I mean, that's a 45-degree angle or even more to the downside right there. And that is what will get you to the crossover. So this is kind of the warning area. And notice that is also tied to a fairly large bar. You just have to say those large bars have to be important. They have to be noted, right? Because they can change the direction of the trend. Folks, after that we did, and these are the things we look at in this class too, because we really want to tap in to that core volume here excuse me, the core price. Price is moving, and we want to keep tabs on that and make sure that we get a sense of what's going on. Now, right now, this is really fascinating because we have a couple of key price indicators as we are in this ascending triangle here within the market. This is an ascending triangle, but you got top, 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 and top again. We're actually going to close maybe, well, we did just close below it, didn't we? So we closed below, at least the line I've drawn in here, which represents a number of closing high levels, closing prices. And we don't know what's going to happen, but it's taking us right to the very end there. Will we start to break out? Will we pull back? Will we flatten out? We're at a very, very interesting stage, you have to say, at this point in time. Now I'm going to go ahead and just pull this back down here and drop this down real quick. And what I want to do is go to our next indication here, and that's going to be a market forecast line. Now I'm going to create in ThinkScript because I do teach that class every Thursday. And what I'm going to talk about, I'm going to put some lines in here for us. I'm going to share this indicator so that you guys have this indicator. But there's your 80, here's your 20. This is really how this operates. I am using the intermediate market forecast line, which can be added right up here. Okay, you can add that on indicator in. I've excluded the other two shorter time frames, and I just have the intermediate term line in there as it stands right now. Now, this is the way traders will use the intermediate term line on the market forecast indicator as an indication of, is the market forecast indicator giving us signs or indications that it's okay to take on bullish positions. Now, if we're above that 80, and this is a long extended move over here, EXT for short, extended move. We were above 80 for a long period of time. And what did that encapsulate? My gosh, a lot of upward price movement, right? A lot. When we dip below the 80, we no longer have that indication that it's saying to us, yes, we can take on positions in the market according to the market forecast indicator. It's just a single indicator, but that is how traders use it, and it can be very, very fascinating to look at. It doesn't matter the direction of that line. It can go up, down, sideways, but if you're above the 80, folks, again, that is bullish. And so we have to state, regardless of seasonality, which tends to be pretty weak in September, we are not seeing that at all. So that's 1, 2, and 3 market posture. So bullishness still remains. And like I said, what are we at? Did we not just hit all-time highs today? We did. Now it's in a consolidation, sort of a tighter range, and maybe we'll break out because we just got above the top. But that will be interesting to see if we can unfold in that regard. Now, here is the Stacks Index. And how does that stack up really using this index? And by the way, quick note on the stacks, you can get to it. It is from Charles Schwab. And so we love to take a look at this because it does provide us with really interesting insights. I did read that disclosure initially, but just about the stacks real quick, 'cause it's been a little bit since we've taken a look at it. You can just scroll down. And by the way, let me just go ahead and share that link with you right now. And in fact, I've got to just pull this up. Just one second, folks. Okay, I'll share that here in just a second. But what the Stacks Index activity it does is it just says here it's a proprietary behavior-based index that is designed to indicate the sentiment of individual investors' portfolios by measuring what investors have actually been doing, buying and selling in the account, right? Trading activity. What positions may they be holding? And it's from a sample of many millions of funded retail client accounts, okay? And really how they've been positioned in the markets. It's got the details right here, but how does that really stack up? And as you come up top and look, you can see over here, well, we have been making new highs in the market, but from a retail perspective, and that's not going to work that line. Okay, let me just change up some colors here. From a retail perspective, highs on the market, where are we at here? Lower lows and lower highs. Now, it did bounce. There's no doubt it bounced up, but folks, very, very moderate. We lost a big, you'd have to say, a very, very big basket of retail investors. Where? 2021 to 2022, they just checked out. They checked out. This pullback right here was enough. I guess many of them, locked in potential gains. If prices have been going higher, whatever the case might have been, we just hadn't seen it the same way. Look over here previously. They were really with the market. The buyers were even ahead of the market at some points in times. And it turns out that they were leading. It was kind of a leading indicator for a small period of time, but also you could say it was a leading indicator to the downside. For this whole period of time, something changed over here. We were getting higher highs and higher lows, but now it's truly a negative divergence. Look at down here. I mean, that's a lower low, lower high. And so that is interesting from a retail perspective. So wanted to just make a mention of that because it is interesting, and we'll see how that does unfold going forward. But man, it's been down for just a little while here, hasn't it? All right. Now, I do need to do this real quick because I do want to share this, and I've got to get into just one area here. Sorry about that. Normally it comes right up for me, but today it paused. We'll see how that does unfold. Okay. All right. So that is the link right there to the Stacks Index. Just want to make sure you guys had it and everything is good. Yes, Rita, I did select that intermediate term line. Thank you for mentioning that too for everybody right over here. So back to it. Click on top. Here are our studies. Just type in market forecast. Market F would pull it up. Double click on it. There's your market forecast. Come right on in here and then just simply knock out that momentum. Take off the show study. Knock off the near term, the show plot right there. Sorry, show plot. Take that off. We're just using that longer term market forecast indication. And that's the one I've got right there. And we use it for market posture. So it fits in quite nicely with what it is we are actually after. All right. All righty. Well, good. Yep. Welcome to all of you joining us too, but that is it right there. How did I get to that site? Yeah, Adagello, if I'm saying that right. I did put that link in so you can kind of keep an eye on the stacks. In fact, a simple internet search would actually STAX, Schwab, STAX would give you the link to it. I believe it may be emailed out to clients too. I'm not certain, but it's there on the site, no doubt about it. All right, for sure. All right, good. Okay, let's continue on. So, oh, I'm sorry. Hit on demand is so close to what I'm clicking on. But jumping back over here, I want to go right into our normal market sector review and kind of show you some interesting developments. Not too much with the McClellan oscillator going on, but as we've been talking about market breadth specifically, look at that advanced decline line. Just take a look at that advanced decline line. Higher highs and higher lows with the market, oftentimes seen as a bullish indication. Again, we are looking at the NYSE, a much, much bigger basket of stocks than the 500, about 2,700 stocks. Plus, that's an indication. Now, remember, we've also looked at that sign and we said we can use this to our advantage about earlier indications about a potential breakdown. Here is a classic example of that, you guys. Notice over here in the market, I'm going to go back in time because we do like to look at historical data too. But over here, these indicators can be so helpful. Look at that. Similar highs Are we topping or not? What do you see on the advanced decline line? This gives us a sense of breadth across a much broader market. NYSE. Look at this line. That's our high that matches over here. But you notice we came to a much lower level in terms of highs over here. We broke down. Market breadth, we have to say, the breadth of the market was declining. The market breadth was dropping. And that can be an indication of a turnaround in the markets. Now, on the other side, that's a negative divergence. Really watch those closely because breadth is such a huge indicator. I mean, if you're seeing a number of companies falling, what's going to happen in the market? I mean, if that starts to take hold and they begin to trend down, you have to be very, very careful. Remember, a trend is a statistically valid concept. And if you get a number of companies that are trending down, which is what AD line can show us, those trends can continue in the future. On the inverse side, look over here with me. This high and this high, if we measure, oh, we broke above that level right there. Gotta love some of these divergence signs, right? Look where it gave us divergence at. It said, according to the AD line, watch this close, we're getting a whole basket of companies that are really expanding higher. We didn't see it reflected in the market. There is some weightedness in the market out there, right? How the index is laid out. But look right here with me. We got that information here. And a lot of the bullish trades that I did actually, in the swing trade class and some of those in the these example trades, breadth was expanding dramatically, and that's how that can give us additional signs, indications that, hey, even though we might not have had a longer term higher high and higher low, the short term could be really quite positive using these kinds of indicators. So I know I harped on that a lot, but those can be really, really helpful. Now, here is the breadth indicator for the market instead. And what are we saying up top here? Well, we're holding okay. Now, you want to see kind of some strength over here as prices have really come into more of a symmetrical range. Similar highs and similar lows, getting tighter and tighter and tighter. But what are we doing? We're holding our price action at this level. So the market is not showing its cards. It's holding back a lot. I mean, it can go either way here, but we're holding that, and all else equal, that could be seen as a positive. We don't know. Of course, things can change, but the trend is up. And if this can start to break out using the SPX equal weight, that's the SPX with the EW at the end, and we start to break out above this upper trend line, well, you can kind of keep an eye on that and say, well, maybe it's time for us to, get moving here. But that'll be another breadth indication. So we got a couple of those. The next one, we take a look at the weekly chart I mentioned to you. Not a ton going on with the McClellan, so we'll just bypass that this week. But looking over here, the Hindenburg Omen, nothing at all. No signs of the 52-week highs and lows being high. We don't have a substantial number of highs or a substantial number of lows out there. Now, if we did, it could represent a fracture in the market. And again, that could be really devastating. I mean, this is a weekly chart, and that was, we had a number of these at a lower high. The red omen spikes, and that could be really quite negative. It is sort of a breadth indicator too, because you're just getting a lot of lows occurring in the market. We're not saying that. In fact, we're doing okay. So clearly a lot of bullish signs right now. We begin to kind of consolidate a little bit over here in terms of highs and lows. I would say this is kind of maybe a little bit further down the trough in terms of breadth indication. It could be interesting, but not making the highs just yet like we were pre-tariffs, tariff change in the market, right? It's been a lot more kind of skeptical. And you know what might be holding this back a little bit? Some of the retail buyers. We saw the stacks really staying quite low as well. So whatever the case is, maybe we're not seeing, kind of the volume that we'd seen previously. This time of the year, it's weak. So even being up this time of the year has been a real positive, as you can see right here. This time of the year, historically, we would be going down seasonally speaking, there is our September timeframe right now that we're looking at. That's September, okay? And this is the time frame. We are ticking down over September. On average, we do that. But again, not every year has to be an average year. This is 10 years. 5, 10, 20, you might see a similar sign to this, okay? So let's get into some sectors here. Just one more, a couple more here. That's a look. By the way, this is just putting the S&P 500 under a microscope, giving us quite a bit more data here. We've got what I think this is like representing of like 13 or so more bars on the day, roughly, using a 30-day, 30-minute chart. This is what we're seeing on the daily, that ascending triangle. We've just zoomed it up, and it's beautiful because the whole thing fits right into our vision here. We can see it. That is that ascending triangle. Now you see these aren't off the highs and lows on the 30-minute chart. Now you could readjust it that way and it would look similar, but I was looking at closing prices on the daily chart to draw these lines. Anyways, that's what it's looking like. Sometimes you can get earlier indications. Let's say, for example, we start to break up above this level up top here, and we start to break higher here, question mark. That would be interesting, right? If you hold, maybe that fuels the daily breakout. This lets us see on a much more minute level what we could ultimately begin to see happening or unfold on a daily chart. That'd be the question, if it could unfold that way. All right, that's a look at, I have to thank Sharon for this. She threw this out to us to take a look at. This is just comparing the NASDAQ equal weight. And we looked at the S&P EW relative to the S&P 500 index. This is looking at the equal weight over here on the NASDAQ. It too has been consolidating. That's our purple line. But we may be on the verge of potentially breaking out above that level, and that could signal a breadth indication that could also be positive. Again, really fascinating to see all this happening during actually September, traditionally a month of weakness. But that's why a lot of times traders will say, trade what you see, not what you think. In other words, what is actually happening relative to what we thought might happen or what we thought could happen. That's one of the lines. Trade what you see, not what you think, because prices don't lie. I mean, it is what it is there. Lastly, this is our last one, I promise here, but it is good to see all these. We're using the futures contract here. That is the E-mini S&P 500 index futures. And you can see over the past 1 year, where did that volume come in at prices? This is what the volume profile provides us, which is just a great tool. This is the top 10% of the volume, with that red bar really being the point of control or the highest volume. You can see where we're at right now. What I'm going to do, though, is I'm going to zoom in actually on let's say a 3-month chart, and let's just see where the volume is over a 3-month time frame as opposed to this 6-month time frame. So let's zoom in over here. There is I'm going to find it. I don't even have it listed. There's your 3-month, not on this one anyways. Okay, the highest volume, or the top 10% of volume over the last 3 months, using the S&P 500 E-mini futures contract is a gauge to the S&P, because we don't have volume there. But where is that coming at what prices? Fascinating. We actually have, if we're above the highest point, which is right in here, right in this range, well, all the way over here, if we're in that range, above it, that could then be potential support level. Now, if we break below it, it could then become resistance getting back up above there. But I'm going to go ahead and lump in this whole area, actually. This whole range right here, this whole entire range is really where you're getting the major spikes of volume. And that could all be construed really, actually, well, maybe more like here. Sorry. This range in here could be construed as support. And so even if we did dip, maybe not much, where it does get risky, or what the volume profile can tell us, is if in fact we were to break below this level right there. Now, it might continue to get weaker over here. There's just less buying and selling. But if we were to tank down here and then break here, this pocket of light volume represents maybe a quick fall in price. That's a ways away. Again, here, and then maybe, it might find support, but if it breaks that, maybe another quick fall in price action. So these are really helpful, but right now I wanted to show you 3-month, we're holding above actually a pretty good range of support. Doesn't mean it can't pull back or go sideways traditionally like September would do, but it's very interesting in that range. All right, let's do this. We're going to go right into our sector grid here, 6-month sector grid. Looking at all the sectors, wanted to highlight still, what are some areas of potential support? Well, the healthcare area had really broken above a prior high over here and had begun to kind of consolidate into this range. We don't know exactly what we might get into the future, but that could be a positive sign in terms of maybe a change in trend. We did get above some prior highs over here. This could be an area that we could look at. I want to actually drill down into that area today, but also when there is an expectation of rates being cut right here. Technology and communication services really kind of fall into the same area, but these tend to do well in a rate cut environment. And that too could benefit the market because like the Mag 7 type stocks, folks, they are clearly in the S&P 500. I mean, in terms of a weighting of the S&P 500, let's get to it right now. Where am I at here? I've got to go into visualize. I'm looking right past it. You can see over here, having a good day, by the way. Oracle, really a good day, up 35% on the day. But some of the big Mag 7s, NVIDIA, Broadcom's not one. Some of the others are not, but they can do well in a rate cut environment. Historically, that has been the case. Folks, do me a favor. If you are finding this presentation of value, smash that like button. It lets me know that you are liking it. It helps to also influence the YouTube algorithm, get more people aware of this class. It's not too commonly followed. It's kind of towards the end of the day as well. But yeah, also love to have you subscribe as well, to a class like this. As we go into more details, I want to take a look at the healthcare sector though, in the scan tab specifically. And what I wanted to do was actually go up top here and just look and see what we have within the S&P 500 that may have broken that trend. Let's break down, some stocks that might be falling into that area. So in the S&P 500, I want to intersect this with, so we're in the scan tab, Stock Hacker, scan in S&P 500 under the public folder, and then let's go to the bottom under industry. We're going to go right into that healthcare, which is all of these industries are within here, but collectively they're going higher. Now, of these industries, let's find out what's really been performing over what time frame? I've got it selected, so I got to hit scan. But what time frame was I after? Well, let's break it down. Maximize that cell grid. Here we are. We really saw some strength, really kick in gear over here and to here. About the last month, I'd say, or so, about 20 days or so. Market days, it's about a month, 21 to 22 days. You'll find it in that time frame. Back into our scan tab, I'm going to scan. We've got 61 companies. Let's make sure they all come up here. We'll just go to 200. So we're going to get 61 showing up. So 61 companies out of the S&P 500. I've got our 1 month all set, ready to go. What's been moving here? Okay, so I have our sub-industries. Well, managed healthcare has been doing quite well. United Healthcare specifically, right, has been a huge leader over the last 1 month. Now, it incredible, sold off incredibly. So I want to pull it up just to see it. UNH right now. Let's see, UNH. Here we go. There's the move off the bottom. Kind of looks familiar, right? You broke up. There's your flag. But what have we done recently? We've extended above this area. So some positive signs here in terms of price action developing on that front. CNC, maybe one that also had sold off over that time frame. Yeah, it's kind of moving up over the last 1 month. It's a lower price stock. So percentage wise, it's actually doing pretty good. It was down at 25 and now we're at 31. That accounts for basically a 23% return. Here are some of these other companies. Now here we go. CVS. I took my eye off this and it has really begun to actually trend up higher quite a bit over a period of time. There's your weekly chart off that bottom. Look at this. So we just took out some highs over here and it seems to be holding that long-term support level. It had been down for so long. Look at this. I mean, people remember this from 2022 to 2025. Wow. That's really 3 solid years of weakness. But we began to break above some highs, and then more recently, some highs over here as well. That is CVS right there. Maybe some support at 70. Okay. That falls into the area. I did want to take a look at BIIB as we take a look at it now. Here it is, BIIB, and just taking out some prior highs, really steady. But I would have, steady as she goes right now, but really, really kind of weak off the bottom. Now it might be reversing. Wow, there's a long-term moving average right there, 50 period that we touched off of last time. And again, and here we are on Biogen. We've used this many times in my swing trade class, looking at longer term trades, that is, and in this class too, actually. But we're right at this level here. That's a very, very weak recovery. At this point in time, it's very, very low, but it doesn't mean that we can't change the direction of the trend too. If the whole sector's going higher, using top-down analysis in this class, we always look at, on the sample trades we do here, how is the market doing? Market, check, bullish, right? Sector, we looked at the sector breaking a little bit higher, breaking above that long-term downward sloping trend line and kind of flagging right now, check. And then we look at the stock. Now, of all these, I have to say that the stock is probably the weakest here, but that's where you try to line up maybe potentially all three, and that's where that big picture set of charts is really quite helpful here. It can be helpful, to give us a sense of how is that top-down analysis lining up for stocks in the scan tab. And we have all the tools here right off the Thinkorswim platform to help us out. EW, we've got BSX and a couple others. Let's see, EW right there. Higher highs and higher lows over a period of time. BDX was in there. You can see it too. Could these be on the mend? Could they be potentially in a position to reverse? Is really kind of the questions we need to be asking ourselves. Now, if we take a look at, I've got just a couple more. I know what trade I want to put on. I just, as a sample trade completely. Now, here's J&J though, over a period of time. Higher highs, higher lows, coming back down and testing. Well, what can we see over here? We could see a potential pullback, but there has been higher highs and higher lows. Money flow has been doing quite well. Think about the longer term moves. Now, many of these companies do pay dividends. If I look over here, here is our Bristol Myers. This has been down for a while, but could be forming something like a possible cup and handle formation over here. We don't know if it'll do it, but can you see another pattern in here? Might be kind of showing itself a little bit. Shoulder, head, shoulder, not a traditional head and shoulders, but an inverted or a head and shoulders bottom, as they're also called as well, could be forming here. Now, we don't have a break above these highs, but it has been showing some pretty extensive money flow, as you can see. Maybe some longer term accumulation of the shares. One thing that it might be getting is, you look up top here and you say, look at that dividend yield, 5.26 on a company that has been around for a while. I think it might be a dividend aristocrat. You'd have to double check that. That'd be 25 years of consistently raising the dividend without missing. And by the way, I have to state too that just because they are a dividend payer, they can have their dividends cut. There's always that risk out there. But sometimes traders will look at those longer term trades, I should say longer term history of being able to pay the dividend. What I'm going to do in this class is just put on kind of a macro trade here, using this as an example for maybe somebody that's maybe trying to collect a little bit of yield if it does continue in the future off the dividend, putting a small position on here and just kind of watching that position. Okay, so let's do this. I'm going to go up top here. Markets are closed, but if I go up top, I'm just going to put in a 100 share order. Sample example trade. We'll go ahead and click on confirm and send. We'll watch it. It's going to be kind of a position trade. And by the way, though, I do like to put in, potential exits as well, considering that. But let's just say, for example, here we are at 47. Maybe if prices come back down and break into a new low, I realize that's a ways down, but maybe there's a large reversal to the upside, whatever the case might be. In fact, we'll use this major last low around 44 or something as an example. Okay, so let's go up top here. A stop order again. Does not guarantee an exit at that stop price. In fact, the order does go to compete with other orders out there in the market. But if I went ahead and just right-clicked, and then we come over here, I'm going to go ahead and put a with stop in place, change it. I'll put both of these to a good tail cancel order so we can have that in place there. And there we go. Market order. We'll go ahead and set this potential exit level. Stop. Trigger around 44 or so. Remember, keeping those too tight, you could get knocked out of a position that you think might be bottoming. You want to give it a chance to maybe bottom as well. Now, it's not allowing me for some reason to confirm. That's fine. I'll just go ahead and leave it as a limit order, and I'll set it in right now. That was the last price. We'll say, try to get it at that level or better. Confirm. Let's take a look at the dialog box just to confirm. You've got your margin requirement right here. Make sure this looks good. We'll send that on through. All right. Well, I wanted to get a trade under our belt today so you guys can keep an eye on this. And again, great to have you here. We did look at the healthcare sector today as the possibility of one of those groups that could be in the process of bottoming. Who knows? But we looked at it, talked about some top-down analysis, and we really dived in, into those areas of market posture initially, looking at a lot of breadth indications in the market, a lot of bullish signs. Of course, things can change, but those indications can be helpful for traders that do use those. So with that, everybody have a great rest of the day. Look forward to future discussions with you. Thank you for your help in the chat as well. Now, let's see. Oh, okay. Yeah. Okay. Just picking up on the last questions here. I think we're all set, and we'll call it a day there. But take care. I'll see you next time.